Hello, and welcome to today's webinar. I'm Nick Zulovich, part of the team at Cherokee Media Group and Auto Remarketing Canada. In today's webinar, Increase Your Sales Today with a Credit-First Approach, we're going to learn more from Andrew and Dee Murphy of Autocorp Technologies. But before we get started, just a couple of quick housekeeping items for today's session. You'll be in listen-only mode for our webinar, but we are recording today's session and we'll make that recording available to you as soon as possible. So keep watch of your inbox for a link to that recording. And if you have any immediate questions for our experts, Andrew and Dee, at today's webinar, we will reserve some time after their presentation for a quick Q&A segment. So if you do have any questions, just use the chat function on the Zoom platform to submit your question. So with plenty of knowledge and recommendations to share, let's get right to Andrew and Dee for our webinar. The floor is now yours.
Thank you very much, Nick, and I'm sure you've heard this before, but if you ever leave Cherokee, I'm sure it's going to be a start your own radio show. Wish I had a voice like you. Hey guys, thanks so much for attending. Thanks so much for attending the webinar today. And like Nick had mentioned, we wanted to talk to you today about how you could increase your sales by taking a credit-first approach in your dealership. My name is Andrew Lemoyne. I'm the CEO of Autocorp Technologies. I'm joined by my co-host, Dee Murphy, our VP of Dealer Experience.
Hi, everybody.
And excited to talk to you a little bit today. Look, some of the key takeaways that I want to go over is I want to talk about like relevant current market statistics around credit. Okay, I want to talk about the advantages of a credit-first approach in your dealership. And then also we want to introduce a revolutionary new credit tool that we're really excited to show you. But before we get into like talking about credit first, I want to talk a little bit about the current state of the industry, which is credit last. Okay, and I want to talk about, so next slide. We'll get it. Next slide. So I want to talk to you a little bit about credit last. What you're looking at right now is a typical process that we hear from our dealers every single day, right? Where a consumer is showing up to a dealership and they're meeting a sales professional. The sales professional is, showing them a vehicle. They're taking demo drives. They're getting their trades appraised. They are negotiating price. They're going back and forth with the desk. They're agreeing on a deal. They're agreeing on numbers. They're doing a service walk. They're telling the customer all about 0% or 0.9% financing. They're talking about the great rebates, right? They're selling the benefits of your dealership, of your facility, okay? And when all that's done and we're agreeing on a deal, we're shaking hands. We might not be shaking hands today, but we're agreeing on a deal. And we're taking a deposit. And then our customer is introduced to our lovely business manager. And at that point in time, the business manager has a different process where they'll offer them protection products, right? And that takes time. So the business manager has their own kind of sales process that they go through. And then once all that's done, we look at credit. And at that stage is usually when a business manager will pull a credit bureau and then send the deal in for decisioning, okay? We know that over a third of customers in Canada don't qualify for prime financing, okay? And, if you think of the process that I just spoke about, we think it's very backwards. I mean, if you think about it, when you buy a house, right, you don't go look for houses and schedule showings and appointments and walk through the houses and, talk about your paint and where you're going to put your furniture and what wall you're going to knock down and do all that with a realtor and make an offer and then even actually set a closing date for the house and do all that without actually being approved for financing. It doesn't make sense. In fact, in today's market, you're not even allowed to see the house until the real estate agent makes sure that you've secured financing. Okay. So why do we do it in automotive? I think everybody can kind of relate to that story that I just talked about. Anybody that's, working on the front lines in the retail dealership, we go through that every single day. And so Dee, I want you to kind of go over some of the key market stats and just illustrate, my point on some of that stuff.
Sure. So as Andrew was saying, there's a real misperception over how much of the market today requires some sort of special financing. So we put together some information for you to get a snapshot around these facts, to give you a little bit more information about consumer credit knowledge and non-prime financing in general. However, before we get too far into that, we want to start off by just asking you guys a question through a poll. So the question we would like to ask is that of those of you watching today who are in a dealership, either franchise or independent, who is credit bureau enabled? So specifically, do you have credit bureaus turned on and are you able to pull a bureau? So we'll ask you to answer yes for, A for yes, sorry, that yes, you do pull bureaus, or B for no, to indicate that you don't pull bureaus. Can you flip to the next slide, James? So while we're waiting for those stats, I thought that maybe we would take a second to, or the results of that poll, sorry, we'd take a second to just look at some of these key findings that we identified. What we have found shocking is that over half of Canadians, 48% in fact, report never having requested their credit bureau. And of those who don't pull their bureau, half of those indicate it's because they don't want to know the information, because they don't think they'll understand the information. Even more shocking is that only a quarter of all Canadians in the last year have pulled their credit bureau. Do we have the results in? The results of the poll?
It just came in. Yes, we can pull bureaus 5, and that's 100% of people that voted.
So we've got,
Wow.
See, we've got the dealers that are attending today. So 100% of them said that in the poll that they can pull bureaus, right?
Which makes sense.
Yes.
So that makes sense to us that those people watching a credit focused webinar would be credit bureau enabled. So you might find it as shocking as we did that 50% of dealers across the country cannot pull bureaus. So half of all the dealers are going blind. They are not able to submit, or they're not able to look at any credit information before they submit. So at the end of the day, what we want to do is sum up some of these facts into a few key points and see what they're telling you. And what we think that the statistics tell you is that consumers are not credit informed. They don't understand credit. They don't know anything about credit. So we also know that the only two pieces of information that seem to have permeated out into the general public that all consumers seem to know is around credit scores and credit inquiries. We've all heard customers come into the dealership quoting those two things, asking about inquiries and quoting a score. Presumably this is because they're trying to sound credit knowledgeable. So what does it mean when a customer comes in and gives you their score? What assumptions can you make? Well, I think it's fair that you can make probably two assumptions. The first assumption is that they likely don't know what that means. They don't have any idea what the number means. The second assumption that you can probably make is that it's inaccurate. And the reason that we think that the number is inaccurate is because there are a lot of consumers these days who are using free credit reporting tools that provide them with the information. The trouble with that is these free tools very often use their own analysis and their own matrices in order to assess what the score would be.
Yeah.
So they're not accessing one of the major bureaus.
Yeah, I'll just jump in quickly, but I'm sure that the dealers, a lot of the dealers that we speak to every single day, they experience that where, Dee's just identified how much of a, people aren't educated on their credit, right? And how shocking that number is. There's a lack of credit education. That's clear. But what's even more concerning is the customers that think they are informed and educated are actually misguided and
They're misinformed.
And they're misinformed. And it just makes the dealer's life even that much. I'd almost rather, as a dealer, I'm sure they'd rather them not be informed at all than to be misinformed.
Right.
Because when a customer comes in with a credit score that they've got from from some tool that they got online, but that credit score is so different. The algorithm that they're using to calculate that score is not at all the score that your captive or third-party bank is using to decision the approval on. Okay, so
or even the reporting agency when you pull a bureau. So when your finance manager pulls a bureau, the score that they receive is not going to be the score that the customer has just quoted to you. And the customer is quoting you these scores thinking that they're accurate and thinking that they are in a position of knowledge about their credit when in fact they're not. And so they very often think they're in a better position than they actually are.
And it's that much more difficult. So maybe you could speak to the score a little bit.
So well, that's it. So if we start talking about what the score and what that means, let's say you have a customer come in and they say that they're 680, or let's say even that they come in and they say that they're 620. Well, what does that mean to you? The short answer is it doesn't mean anything. The score on its own is nothing more and nothing less than a numeric representation of that credit reporting agencies and risk matrix, how they've weighted the risk, how they assess that person's risk, which in turn often has very little to do with how the lender is going to report or rate the risk. If you think about it, it's true. If all it was score generated, every lender would give you the exact same approval based on that score. But we all know that when you submit in, you'll get half yeses, maybe one yes, maybe all yeses, maybe all no's. And so the fact that you get these different results on a submission really illustrates the point that it's not score driven. It's all about what's on the bureau. I've seen high 600s be declined prime, and I've seen low 600s be approved prime, depending on what's on the bureau and how you can make the case towards that. Everybody knows that missing a payment is bad. Objectively, that's easy information to just run through the logic. But what nobody knows is that how you use your credit is just as bad. Most consumers don't have any idea that how they're using their credit and what the balances are that they carry. All of this other aggregate data is almost as important as missing payments. So we all have had customers come in and consumers come into our dealerships, and they know that they know that they've got bad credit. They know that there's concerns. Maybe there's a bankruptcy, maybe they have a collection agency chasing them, or they're behind on some payments. And these ones very often are going to tell you, they'll come in and they'll say, very often before you even start looking at cars, they'll say, I've got a couple of concerns, my credit's not the best. That's typically what they say. My credit's not the best. And so when you offer a pre-approval, they're game for that. But a lot of consumers who end up being declined have no idea that they've got bad credit. They don't know walking through your dealership doors that they're going to be declined. They think they're going to be approved. So, and that's based on this misinformation. They don't know what the outcome of that is going to be.
Yeah, exactly. And another shocking stat was that only 21% of Canadians have a credit score between 680 and 749. Okay, and then, when we start talking about how to identify these customers, right? So when you have customers coming in through your online website, walking in through your front door, and how do you identify what a customer that's credit challenged looks like? Well, you can't, right? We know that over a third of your traffic is not going to qualify for prime financing, okay? We've also just identified that there's a huge lack of credit education in this country, right? So most people have no idea what their credit is. And those that do, most of them don't know what it means.
It's true.
Right? So, what kind of experience is creating, guys, for the customers? Think about the experience that I just talked about where they're getting served up credit last, okay? What kind of experience does that create for the dealership? Because what happens is, see, the customer comes in, spends all that time with your dealership. And they spend, they like everything we went through, they appraise the trade, they go through the whole process with your store, okay? And then when they get into the business office and they don't qualify for the original financing that they were served up, what happens, right? Well, most of the time it ends with a deposit being refunded. The customer can't get out of your store quick enough. They're embarrassed, they're ashamed. They've totally wasted their time is what they feel like. Your dealership, your sales team, they've wasted their time.
Well, because while they've been waiting for their approval, they've been snapping pictures of the car that they just bought, putting it up on social.
Yeah, he's right. When a customer buys a car, when you finally come to the agreement, at the desk, and F&I is kind of getting the file prepped, and there's that, that moment, a couple minutes where you're getting ready to do the turnover, they're excited. They just bought the car, right? So they're texting their friends. They might be, posting on social, but there's some sort of mental ownership that's just occurred. They really feel like they were just able to close a deal and buy a car. So they're excited, right? So there's nothing worse than getting told, oh, I'm very sorry to inform you, but those numbers aren't going to apply. It looks like there's a couple of blemishes in your credit score. You know, we are going to be able to work with you, but these numbers, in fact, that vehicle might not even actually fit. We might need to look at another vehicle and talk about other numbers, right? So the customer freaks out. They can't wait to get out of the dealership.
They think it's your fault.
It's your dealership's fault, right? You serve them the news. You're the delivery. You know, they shoot the delivery.
Right.
And they leave. And then what's happened is your store just wasted a bunch of time and just lost the deal. Just lost the customer. Now, that customer, the need for that customer to get a car, that hasn't changed. Like, the customer still needs a vehicle. That original, you know, need for a replacement, or their family's growing, or whatever that individual, you know, scenario is, that hasn't changed. So what happens is the customer goes back into the marketplace now, a little bit more informed, you know, a little bit more cautious, okay, because now they just were told kind of where their financing and their credit lands them.
Right. So they're the guy who walks through the door and says, hey, my credit's not the best.
Right.
At the next dealership.
At the next dealership, right? So, and they probably actually end up going online and then seeking some sort of education, some sort of pre-approval method, right? But some different process, because one thing's for sure, they don't want to go through again what they just had to go through at the store, right? So, you know, when we talk about a credit lead, okay, and we talk about that journey and what that looks like for a dealership, credit apps are like the highest converting lead that we see off of dealer sites, okay? You know, we know that 91% of, you know, shoppers in Canada need to take some form of financing, whether it's financing or leasing. You know, 91% require financing. And let's be honest, the 9% that are paying cash, half of those are probably lines of credit anyways, right? Like, so there's not a lot of people that are like truly liquid cutting checks. So most people need financing. And, you know, we also know that it's the highest converting lead a dealership can generate from an online shopper. You know, one thing that we didn't talk about earlier when I was, you know, showing you what the in-store process looks like, you know, when a customer shows up and goes through that whole process, what we didn't talk about is what did they do before that, right? Like, what did they do to get them there? So the online digital journey, right? We know that this customer's been in market for like 60 plus days. You know, they've experienced like 20 plus touch points, right? We know that they're visiting on average 1.2 dealers before purchasing. That's a pre-COVID stat, by the way. Like, it's probably lower now, right? So they've never been more qualified before they show up, but they've gone through all that digital steps before getting to the store, before getting to the inquiry. So why are the credit app numbers so low? Because we know that most of your customers require some form of financing. And we also know that, like, it's pretty rare that we find a dealership site that doesn't have a financing section, right? That doesn't give the customers the ability to complete a credit application. Yet so little are.
The bounce rate's high.
It's very, very high. It's a very, very high bounce rate, you know? So I also want to talk about, like, the power of the information that you get off of credit, you know, what that information looks like, because I think that we get lost as an industry in whole around the score, like Dee talked about. Like, everybody, you know, just really focuses on the score. But Dee, maybe you could talk a little bit about, like, the information that a dealership gets from credit and, you know, how that could benefit them.
Yeah, for sure. Can we flip to the next slide, please? So the first thing that we always look at when we're looking at a bureau is the score. Now, I said earlier that, you know, a score on its own doesn't mean too much. It's just an impression, and that's true. But nonetheless, it is an impression. So when you look at a score and when you look at that number, it is going to give you a general idea of what you're going to see on the following pages. Now, in my experience, when you put that score together with some of the other information, that's when you get the full picture. So what are some of the other things that you're going to see? Well, the next thing that you're going to see is credit inquiries. I love credit inquiries.
Why do you love credit inquiries, Dee?
Well, first of all, it tells me so much information. It tells me, first, are they shopping today? And if they're shopping today, where are they shopping? How many dealerships have they been and where have they been submitted to? So sometimes you can see that they've been to 3 stores before they came across the street to your store. And so that's a pretty good hint that something didn't happen. What I like even better than that is when they aren't shopping and they've just come into my dealership, but I see that 4 months ago they were shopping but they weren't approved. 4 months ago they were shopping, but they weren't approved then that tells me a whole different story, because if they were approved 4 months ago when they were shopping, they'd be driving the car they bought 4 months ago.
Mm-hmm.
And when they're not, I know that there's more going on. Oh, that's okay.
For sure.
So the next thing that you're going to see is trade lines. This is really the meat and potatoes, right? When you look at a trade line, the information that you get off of a trade line is invaluable. So auto lenders love to see well-paid auto. They love to see auto history. So what information is that going to give you when you're looking at how you might structure a deal where there's auto present? So what are you going to see? You're going to see how long they've been in the loan. You're going to see what their payment history is. Did they miss any payments? If they did miss payments, how long ago did they miss payments? You're going to see what the opening balance was. You're going to see what the current balance was. You're going to see what their payment was. So there's a lot of information that you can pull out of that. For example, if somebody's been in a car loan for 2 years and they've been making their payment, and let's say their payment's a normal payment, $400, $350 biweekly, let's just say. And in 2 years, they've paid down $1,500, and you can see that they're with a non-prime lender. Well, it's a pretty good clue to you that that loan was in a high interest rate, because we know if we ask the customer what their interest rate is, they don't know. None of them, most of them don't even know what the lender is that they're currently with, and they will almost always misquote the interest rate that they're paying. So if you see they're with a non-prime lender and they've only paid down $1,500, maybe two grand maybe in 2 years, you know that that interest rate was high. And so what you're looking at is maybe a near prime deal on this case instead of maybe prime, because it's unlikely that they're going to go from a high interest rate right back into prime. Whereas if you see quite a bit has been paid down, or they've been in it a little bit longer, then you might have a better chance, depending on some of the other information like a score, you might have a better chance at a prime approval. The other thing that it tells you is if you look at what the balance is and you look at their trade, you immediately know what kind of negative equity you might be dealing with and how you have to structure the deal, and maybe what vehicles you can look at to help absorb the negative equity, because some vehicles will buy them better than other vehicles. And so it gives you that information as well.
Mm-hmm.
So the question is, why don't we if we get all of this information through a pre-approval or through a credit inquiry, why don't we put everybody through that journey? Well, the question is obvious. And that's because when you offer it to a consumer, the question that you almost always get is, will this be a hit on my bureau?
Yeah, like I've talked with hundreds of dealers about a credit first approach, and that's definitely the number one objection I get from the dealers. Like,
Absolutely.
you say, yeah, it sounds great, Andrew. Like, it's easier. It's one of those things that it's easier said than done. We'd love all that credit information upfront early on our shoppers. Okay. But how do you do that? Like, how do you ask a customer to run them through a credit check before you really get into, the whole process and the sales process, right? And, Dee, you were just going to speak to the number one thing customers say when you bring it up,
Yeah,
firsthand.
Right. Well, will it be a hit on your bureau? And it's a really funny thing that they ask, because they don't even know what that means. No customer understands what impact a hit on your bureau is going to have. All they know is that it's bad. That's the only thing that they know. Credit inquiry or a hard hit is bad. I've had customers, in fact, say to me that they wanted to avoid a pre-approval or a credit inquiry because they're going to be applying for a mortgage in 4 months, as if this inquiry is going to have some impact. So imagine if you could get all of that information so that you could structure the deal without it being a hard hit. Well, we did, and Andrew's going to walk us through what that looks like.
Yeah, and before I do,
James, can you switch slides?
What Dee was just really talking about, and that objection that we hear, will this impact my credit, is, I believe, one of the same reasons why there's such low lead volume from dealers' websites as well when it comes to consumers filling out a credit application, okay? there's this fear and there's this misconception that an inquiry is so impactful that customers avoid it at all costs. They actually, in some cases, it will throw off their whole buying decision. Like they will literally delay buying the vehicle because once they realize, oh, you have to check my credit. You know what? I'm really just looking right now. Like I'll come back in a few months. I'm going to go home and you're like, I'm not really sure. There's this fear and they try to avoid it at all costs, right? So it's been very, very difficult for a dealership to get around that, right? Because at the end of the day, when the customer asks you, look, will this impact my credit if you get me pre-approved, right? If you check my credit, will this have an impact? The answer always had to be yes. You know, it did. Like, it's like, well, yeah, it will. You know, you can try to educate them that, look, it's not going to have nearly the impact that you think. Okay, but at the end of the day, the consumer hears those words that, yes, it will. We have to check your credit, right? You're applying for a car. So we're really, really excited because what we did is we looked at this years ago and we asked, you know, how can we change this? You know, at Autocorp, it's our mission to really make the automotive industry a credit first industry, right? And we looked at like, how can we do that? Well, we have to lower the barrier. Okay. We have to remove some of these hurdles that dealers are facing. One of the biggest hurdles that we saw when we spoke to dealers was this notion of the hard pull, right? We know that the hard pull is something that needs to occur, that a bureau later on in the process is something that is going to always need to happen. I mean, when you send it in for an approval to an actual lender, you know, it's going to need to happen. But we also know that if we can introduce credit a lot earlier on in the shopping cycle, like online, okay, and we can educate the consumers and educate the dealers a lot earlier on in the process, the dealers are going to be able to handle those customers so much better, so much more strategically, right? They're going to be able to give them custom solutions. They're going to be able to know what to show them and what not to show them. They're going to be able to know what to quote them and what not to quote them. You know, and when Dee was talking about the auto trade lines, you know, one thing I love, I can tell you from the desk of a sales manager, you know, of a desk manager, to know like what the customer's payment is, like up front when I'm desking, I already know what they're paying. I know what their current payment is, right? I know the approximate, you know, length of their current loan, right? Got some details on the vehicle, like the approximate lien buyout, right? Like within, right? It shows what the current open loan is. So like I could gauge if they're underwater. Like, do I need to be really cautious and desk with negative equity based on what the trade's worth versus what the lien is?
And for me, what I like to see most, I like to see what that lender they're with and how long they've been in that loan, because that tells me what category I'm going to get on this approval.
Right. So we set on a mission to do this 2.5 years ago. And I couldn't be more excited to tell you right now that we have released a tool that just does just this. Everything that we just told you about is exactly what Ava, our new revolutionary credit tool, does. We've partnered with Equifax Canada with this tool on a mission to educate the consumers and the dealers earlier on and introduce credit earlier on in the shopping and buying cycle, okay? So this is the first time as a dealer in Canada that you are going to be able to look at Equifax information through the channel of a soft hit, okay? And that's going to remove that barrier that we just talked about, where the customer's asking you, will this impact my credit? Well, the answer can now be no, actually, no impact whatsoever. You can go ahead and you can check your credit, right? And then it gives the dealer the information. Now, when we set out to do this, we knew that there was some key attributes, just some key details and pieces of information that the dealers really, really needed. We knew that the score in of itself wasn't enough because, like Dee said, it doesn't tell a whole story. And I mean, nothing is ever going to tell a story as much as a full hard pull, but we knew that there was some just really key pieces of information that a dealer needs early on, okay, to really make a smart desking decision, to really, know how to proceed with the customer. So the score, of course, is one of them. But Ava actually provides you two other key pieces of information that we've talked about today. So the other piece of information that it provides you is the inquiries. So like Dia just said, you're able to gauge, is this an active credit shopper, right? Is this customer currently out in the marketplace shopping? Were they shopping last week or were they shopping 4 months ago? They both tell a different story, right? One tells you a story that they're currently in market right now, right? The competitor across the street was just pulling their credit yesterday. The inquiries 5 months ago tells you a different story. They tried to buy a vehicle 5 months ago, but they never closed out. Yeah.
I was just going to say, conversely, what you can see on it as well is if, for example, you see that they have 4 years of well-paid auto and their inquiries are under control and it doesn't look out of control, but their score looks unusually low for what you're seeing, well, then that's a pretty good hint that something else is going on. Maybe there's a collection, maybe there's a bankruptcy, but it starts to create some areas where you can ask questions, because when you put all those attributes together, it tells a story.
Yeah, exactly.
So what does the journey look like?
And then the third, the third thing would really be the auto trade lines. I just wanted to clarify the three key pieces that Ava gives, right? So we've got this credit score, we've got the inquiries, okay, to identify if they're an inactive credit shopper. And then we've got the auto trade lines, right? To identify kind of if they're in an auto loan right now, what does that look like? Right. We feel giving these three pieces of information to a dealer early on in the shopping process through online channels is a game changer, okay? It's gonna totally allow the dealers to change the way that they approach credit and the way that they approach the deal, okay? So what Ava is an online subscription model that the dealers are going to be able to put and install on their websites, okay? And it's going to allow them to offer their online shoppers the ability to get pre-approved, to check their credit score, and to do that all with no impact whatsoever. You were just talking a little bit about the journey.
Yeah, that's exactly, I was suggesting that we talk about how a customer would get onto Ava, how a customer will find Ava, and what that looks like for the dealer, and what journey the customer is going to go through, because there are some specific attributes that we offer through an Ava lead. One of which I think is particularly valuable to a dealer is the element of EID.
Yeah. So these are not just, the days of just an open source lead form. We know where a lot of those forms lead to. It's misinformation, it's inaccurate information, it's frustrating for dealers, and it's hard to filter through. Okay, so, what Ava does is it actually allows a consumer to check their Equifax credit score right on your site. Okay, but in doing so, we put them through an EID process that actually identifies them, asking them key personal questions. Okay, and we've now successfully matched them to an Equifax credit bureau. So when you get a lead through Ava, this is going to be the most qualified lead your store has ever experienced, okay? Because we know all the information's accurate. We know they've actually successfully EID'd themselves, and now your dealership is getting all this level of information, right? Think about what it's going to be like to get this level of information on a lead before your store's even made contact with them. Like, this is before you've even picked up the phone to make a dialogue. You haven't even sent an email yet, and you've got all this information. So we're pretty excited about it.
So I know one question that all the dealers are going to ask
is
can this integrate with my CRM?
Of course. I mean, I don't think we could release a lead tool that couldn't integrate with their CRM. Also, we provide the dealers with a back-end Autocorp portal, secure dealer portal, that they're all able to log in and view all of their Ava leads in, but we could also push into any CRM that they need, for sure. So Nick, I hope the connection feed was good there. We were getting some in and outs on our end, but I hope it was good. I know that you were talking about maybe going to Q&A.
Absolutely. No, that each of you sounded crystal clear and very exciting information and developments, to say the least. Again, our special guests for today's webinar are Andrew Lemoyne and Dee Murphy from Autocorp Technologies for our session titled Increase Your Sales Today with a Credit-First Approach. And certainly exciting developments in the finding out of what type of potential customer that you're working with. And to start out continue our conversation here, each of you could perhaps address it from both the consumer and the dealership perspectives. How could this tool possibly replace that hard pull that the dealership could perform that creates all that apprehension and potential negative outcomes there? How can this tool replace the processes that a store might have already had in place?
Well, Nick, I think it's important to mention that like the intent of AVA is definitely not to replace a hard pull. In fact, we think it'll probably end up increasing hard pulls, because what the intention of AVA is to introduce credit a lot earlier on. Okay, we think there's a place for a hard pull. In fact, we know there is, right? At the pre-approval stage, when the deals are being sent into lenders for an actual deal and you've got a VIN attached to it, that's the place for the hard pull, and that doesn't change. But we asked ourselves, how do we introduce credit a lot earlier? And that's where AVA through soft pull technology just makes so much more sense for consumers and dealers.
I also think that it's going to disarm the customer a little bit around the concerns about a hard pull. And the reason that I think for that is because the information that the dealer gets, the consumer also gets. So the consumer is getting their actual score from Equifax, their true Equifax score, and they're also getting their auto trade lines and their inquiries. So they're seeing some of the information. And when the dealer sits down with the consumer to talk about what that is, it's easier for them to put them through perhaps a pre-approval process where a hard pull might be taken, because the customer then has accurate information about their credit situation before anything gets started.
And very good, very good. Well, certainly another point that's been raised by some of the dealers on here is the thinking that they don't see a whole lot of non-prime customers either come onto their website or through their doors. Maybe you could perhaps revisit some of the information that you shared, that maybe perhaps they do have a lot more non-prime customers or potential customers coming through their doors or onto their websites.
So I would say that my answer to that would be that this is not an exclusively non-prime tool. I think that the information that's being gathered, so the statistic is, you know, something like 25 or 30% of Canadians' credit is non-prime, but 40% or upwards of 40% need some sort of special financing considerations. So that's outside of non-prime. Negative equity is the biggest deal killer right now. And being able to see what the actual approval is, to be able to see what the actual payout is, and to be looking at a trade-in, you know immediately what situation you're dealing with on a soft pull. So I would argue that it isn't necessarily a non-prime tool. Yeah,
because Nick, you know, the lack of credit education is not specifically to the non-prime shoppers; it's to all Canadians, right? There's a lack of credit education as a whole, you know, and you know, I know that you guys are based, auto remarketing is based in the US. And when it comes to credit, the US is a very different market than Canada. You know, the US tends to be a lot more, you know, credit first. Consumers are a lot more actually educated on credit. Whereas in Canada, the stats show and tell a very, very different story, right? Canadians just aren't nearly as educated on credit. And we were a little later getting some of this, you know, technology like soft pull technology that has not been available. You know, something like this, when I was in retail, nothing even close to this existed. There was just no way. And I think it's existed, you know, in the US for a decade plus. So.
Well, that's and certainly I don't want to give too much credit to us here in the United States. It's certainly a credit learning process as well, even if the technology perhaps has been there. Again, our special guests for today's webinar, Andrew Lemoyne and Dee Murphy with Autocorp Technologies. Increase your sales today with a credit first approach. And just a reminder that we are recording today's session, so certainly keep watch of your inbox for a message that will contain a link to that recording, so you can share the great information and early description of the tool that Andrew and Dee have shared. And to round us out today, perhaps if you could bring that last screen up again, it's definitely piqued the interest of how to get a demo of this tool. If you could, again, there it is on the screen, an email address, website, and phone number to reach out to Autocorp to schedule a demo. If you could, to wrap us up, take us through what clients can expect from that demonstration to perhaps put this tool in motion at their store.
Yeah, absolutely, Nick. So for the dealers that have attended today, first off, thank you. Thanks, guys. I know you're busy and you're kicking off a new month. And thank you for spending some time with us to really take a look and listen at what we're here to talk to you about. We'd love an opportunity to show you, Ava, end to end, right? Show you how the tool would look and perform on your website. Show you a little bit about the back end and what that would look like from an in-store perspective for your managers. And Nick, I don't know if you're seeing this on your side, but we see a couple of questions popping up on the screen. Do you see those?
It was in reference to the demo.
Okay, perfect. Awesome. Yeah. So yeah, the slide's up there. Like I said, we'd love an opportunity to show you guys. This is a no obligation demo. Okay. This is a no hit on your dealer's credit to do this demo. Okay. So we would love to show you the tool and what that looks like. And thank you again for spending some time with us and listening.
Very good. Well, great way to leave it. Again, that's Andrew Lemoyne and Dee Murphy from Autocorp Technology. How to find a way to have the credit first at your store. So Dee, Andrew, thank you so much for sharing the great information and development of the great tool. Thank you again for joining us.
Thank you very much.
Thank you, Nick.
And on behalf of all of us at Cherokee Media Group, we thank you again for joining us, and we look forward to having you again next time.